If you can't handle the heat of these hot socks, then stay out of the kitchen and consider investing in the index funds. Oh, bam. Cool, baby. You know what it is. Welcome back to the channel. What is up, everybody? Welcome to Trades, where we have technical analysis on different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, my friends, we're giving you an update on the NASDAQ. So, we've been tracking this market correction that's been going on here for a little while now, and I've been trying to give you guys what I kind of anticipate with what's going on. I say market correction because I don't think it's a crash. I cannot tell you how many times I put out market correction videos, and you get that guy that says, Trey, this is a market correction. This isn't it. This isn't it. This is a crash, right? This is going to be the worst financial crisis in who knows how long. And I'm telling you, there's not enough catalyst there for this. And I can see why people might think that. You simply look on the news, right? You Google market news on YouTube and you get things like this. Why investor Steve Weiss is getting more negative on the market. You've got markets are in a danger zone. What the 1.9 trillion stimulus package could mean for the market. You got all this uncertainty. Uncertainty causes fear. You simply Google market crash on YouTube. And what do you get? You get a million different videos from a million different people. Me, Kevin, actually is spot on the money. He predicted this just as we did here at the channel. And he said, guys, this is not a market crash. This is a market correction. And this isn't it. This ain't it. This ain't it, Jack. This was not a market crash. And we're going to tell you why. So we've got a couple different things that have been going on here. I've been covering the technical analysis side of things, looking at these different levels of support that we're looking at in terms of Fibonacci retracement, looking at some technical setups, right? We look back here and what would have been, between September and November when we had that double dip, that George W. that's set up here, right? And people thought, oh man, what if we get something like this again? Well, we didn't, right? I think we're in the clear for now. And I'm going to tell you why. So there's two different things that are kind of driving the market right now in terms of market correction. You've got this worry about inflation. I've seen numbers bounce around about 5% inflation going up over the next year or whatever. And we've seen these bonds going up. Typically means that markets go down, and that is factual, right? Bonds going up does usually mean that market goes down because there's always different sorts of investments that are competing for your money, right? So if bonds go up, market could go down. If you transition from a seller's market to a buyer's market, which we are in right now, we're in a seller's market, right? We go into a buyer's market. You could also see that reflect on the stock market. That could drive the price down as well. For me, there's not enough going on in terms of catalyst to drive this market into a market crash to really justify that, right? You have the tech bubble. You have a lot of companies, a lot of institutional investors, a lot of the big wigs that are saying, guys, tech is overvalued. There is a bubble. You need to get out of this right now. And true, we did see a gnarly correction on a lot of stocks. You pull up a stock like Microvision, for example, a company that was up, let's just take a peek here. It went from $24 all the way down from $24 to $10, right? That's a pretty gnarly correction. And I would argue a overcorrection. That is not quite justified to me. And you can see that already. This is really starting to correct itself and fix that problem in which we had been seeing. So, with that being said, we look at the NASDAQ here. We come back to the NASDAQ. What are we going to see, right? We're seeing that the market is starting to bounce back. So what did we predict? If we look at a Fibonacci retracement, I had said you're likely to see a couple different things happen, right? We've got this 38% retracement, the 50% retracement, and about a 61.8% retracement, which I moved up. I shifted that line a little bit to match this technical level of support right here with this triple top. 1, 2, 3 touch points. And when we broke over that, we got into that nice, disgusting upward moving channel, a filthy one, right? And I said I could see a couple different scenarios playing out here. You can see it hold up at this 50% retracement, and if it breaks that, you're probably going to test this technical level of support. Well, we did that. We broke through that 50% retracement right here. It tried holding it, ended up breaking, right? We got a candle wick that tested down here at that 50% retracement, broke through it, tested out that technical level of support. We ended up testing it again another day with a wide range candle, opens up here, closes down here, right? Touch that again. We got almost 3 touch points, 2 at least, and it didn't quite break it, right? So that technical level of support held us up, and I think that is for good reason. Now, I know a lot of people are probably thinking something like this. Trey, most people don't know what this even means. Most people don't pay attention to the technical levels of support. They're only investing in the market based on fundamentals and fundamental value. But that's the beauty of the market, guys. It is a living, breathing, freaking beast. It's a beast, and it holds itself up based on the big dudes who are holding the market up, the institutional buyers. Personally, I think there are a lot of institutional buyers that were out there, and they were saying, you know what, guys? This is the biggest opportunity that we're probably going to get in the next couple of months to load the freaking boat on a bunch of different stocks, and they did it, right? They loaded the boat. They bought a crap ton of stocks, especially tech stocks, right? And what are we seeing now, right? What you're seeing is you have this downward moving channel. You had a descending level of resistance, descending level of support, and a harsh downward moving channel, and we broke it. We have a candle right here that actually opened and closed above this descending level of resistance right here. Now, I'm not necessarily saying that you're going to see today is going to be a red day or a green day, right? You got to think macroscopically speaking. What I'm saying macroscopically speaking is it does appear that we are down and out of this downward moving channel, and we are back on an upward moving trajectory. The next big level you're going to watch for is going to be this level. It's at $13,685 on the NASDAQ. And we break through that, I would anticipate we are back in business, baby. We are back cooking with Crisco and rocking the market the way that we know it should be moving. So that is good. This was an opportunity to load the boat. And we don't always know how far a stock is going to dip, right? We could have anticipated that maybe this is the first dip. Maybe this is the second dip. Who knows? Maybe it'll do something like this again, right? But what we have it being the difference between this correction and this COVID correction back here is there's just not as much going on. There's not as much going on. You had so many people being fearful of the pandemic. I mean, I remember when I was in Minnesota, you had the Minneapolis riots. You had a crap ton of crazy stuff going on right there, right? Where people were burning down buildings. There were people literally raiding stores for toilet paper and stealing TVs and stuff because of all this craziness happening with COVID and the quarantine. They thought the world was going to freaking end. And this is how much of a correction you saw, right? That's a legitimate crash. You saw a drop from 9,600 points down to 7,000, almost 6,800 total points, which is justified. That is an actual crash with enough catalyst to make it happen, right? And when you look at this compared to where the market was previously, it dropped below previous levels. It was more than a 100% retracement, which is what I would consider a crash. Well, if you want to see the market crash again, right? If you're a bear and you want to short the crap out of the market, which is, you do you. I'm not going to bet against the market. You want to see a 100% retracement. And think about this. Do you really think the NASDAQ is going to drop down to $10,976? Do you think that? Because I'll tell you right now, I don't. I just don't see enough catalyst there. True, you've got inflation. Inflation's always going to be happening. Inflation does affect the market, right? But I don't think inflation alone is going to cause the market to come back all the way down to $10,000 or from there, $10,700. I just don't see that happening. I don't see that happening. This is an opportunity for you guys to take advantage of that. And hopefully you did when I was putting out these videos saying, I really don't think we're going to break this technical level of support right here with this triple freaking top, right? And bought in. Tech stocks are going to be huge. Personally, as an investor, right? What I pay attention to is innovation. I love innovation. I love to be a part of companies that are always working towards a beautiful future. That's why I'm in Microvision. That's why I love Sensonics. That's why I like AGTC, right? That's why I like Exxon, right? XONE. All these innovative stocks, they took a beat down because there was fear, there was panic, right? And that's when people are fearful, you have to be greedy. In a market of fear, you have to be greedy. That is what separates you, right, from losing money and making money. We buy dips and sell rips, baby. We don't buy rips and sell dips. That's backwards. That's why people lose money, because they're playing it all backwards. You need to master the art of human psychology, right? And you need to be able to center yourself in your own thoughts and your own emotions and be able to hold true to the market. I don't think this is a crash. I really, really don't. And we've got technical support here to say it, right? We've broken out that descending level of resistance. We've got the 15 MA starting to parallel itself with that 200 EMA, right? If you saw the 15 MA drop back underneath the 200 EMA, which I think it has never really happened, even maybe back here it did for a while, that's a crash. Watch for this. You'll know that we've officially crashed, because that means that the microscopic price action has dipped below the macroscopic price action, and the macroscopic price action of the market is extremely, extremely bullish. Time and market, my friends. You just need to keep playing the game and load up on these dips. Now, there's going to be people that said, Trey, well, why didn't I just sell at the top and then reinvest at the bottom? And there's no one saying that you shouldn't have done that, right? But then the problem with that is if you sell out at the top and you misjudge the top and it keeps running without you, and then you just get left in the dust, you're not going to know if you did the right thing or not. If I would say, for the future reference, if you want to reinvest at the bottom of a stock, right, a stock market correction from the top, I wouldn't take all your money out. Maybe take out 10%, 20% of your total portfolio. Maybe trim off some of the winnings that you've had, right, your profits, and then reinvest them at the bottom if you think there's a market correction coming. But for me, this is just not it, Jack. This ain't a crash. You're not going to see it happen. And I told you guys from the beginning when we saw it break that first level of support right here, that ascending level of support, we got this candle right here. That's when I started making videos because I didn't want to scare people. I get sick of seeing these stupid clickbait YouTube videos that are saying market crash, market crash. No, they're just mongering fear. And that fear is what drives people into selling their stocks because they think an actual market crash is coming. There's just not enough there to make it happen, guys. From what I see, we had a tech bubble, we've got inflation rates, we've had the bonds that were going up, which decreases the value of the market, right? Because they're always competing for people to have a place for your money, right? They want your money in their investment. And with that's short term. That is short term, and you want to be a part of the market, guys. I'm promising you that. So that's what we're looking at right now. Now, if we have a little mini pullback again, what are we going to be looking at, right? Is this going to be all the way going back up now? Are we only going to see up days? No, right? We're not going to see it just be straight green candles until we hit this level of resistance right here at 13,694, right? You're going to have red days as well. And this has been a bumpy journey. I mean, red, green, red, green. But the big picture is that we are still growing, right? We're getting out of this hole that we dug. If you were able to load the boat on your stocks like Microvision when it was at $10, or your Exxon that was at, $20, $19, which we know both those companies are huge companies doing great things. They've got so many fundamental and qualitative values that I stand for and I believe will grow with the market, not be left in the dust, right? You should load the boat on these opportunities, and you're not going to get them very often. So hopefully you were able to take advantage of that. If you do see a dip again, if you see a repeat of something like this where you get that George W setup, right? I hope that you take advantage of it. I really do. And if I think that that's coming, I will tell you guys. I'll look at this technical level setup, right? I'll look at these resistance lines, support lines. I'll look at the setup, and I'll tell you, hey, it's possible we see another correction. But if I don't think there's one coming, I'm not going to tell you that because I hate this fear-mongering stuff. I don't like getting the clicks for just scaring the crap out of people because I know everybody's searching it, right? It looks good. This is promising, right? So I feel good about it. Kathy Wood feels good about it. A lot of really huge tech industries feel good about it. I'm willing to bet you that institutional investors are stepping back up to the plate for tech and for innovation. And that is what I've got for you guys here today. If you enjoyed the video, please drop a like. It really does help support the channel, and consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with a $100 deposit. I'll receive a free stock. Great to support the channel, my friends. And if you're not interested, that is totally fine. I just appreciate your support by taking the time to watch my videos. I also have a link in the description box to the merch store if you'd like to pick up some Gorilla Gang mugs or a George W hoodie, and a link to the Discord where you click on that. It's a $5 a month for the Patreon. 2 easy friends. You'd be a community of great investors who make some awesome picks. And that is what I've got for you guys today. So thank you for watching the videos, my friends. I'll see you all in the next one, and peace.